So, hello and welcome everybody to today's session from the Investment Academy. We will now start our presentation and workshop series. This today will be our first out of 7 presentations, and today's topic will be decentralized finance. After the presentation, there will be a Q&A, and Alex will surely answer all your questions. And we will stop the recording for the Q&A. So I think without further ado, I can hand over to you, Alex.
Yes, thank you very much. So I will share my screen and let's get into today's topic. And this is decentralized finance, or in short, DeFi, as people say in crypto. And this is definitely my favorite topic to talk about. So I'm really happy to do that today. And so the content of today, we will first have a short glimpse about what is the state of DeFi today, so that you get a first taste. And then we will go back in history, talk a little bit about the evolution of DeFi. Then we will look at DeFi versus traditional finance, so where are the real differences here. And then we will also have a practical part of it, as I said, that is opportunities for personal finance. And then later on, we will also have an outlook about business and career opportunities. So there is so much room in the crypto space and in DeFi, especially for startups and also for existing businesses. It's quite compelling. So, yeah, just to have a flashlight here, when we talk about DeFi, I could ask you, would you like to earn flexible interest rates of a 30% annual percentage yield or more on your US dollar savings? Would you like to trade any financial asset without a broker account 24/7, 365 days a year? Do you want to hedge your investments with futures and options for any amount and not only the standard amounts, as you know? So these are all examples. And if you say yes to any one of these, then you probably should take a close look to DeFi. And there's, of course, way more. So yeah, what are like the most important protocols in the DeFi space today? Just to give you an overview of what already exists and what you can use to build new applications for. So, for example, we have the decentralized exchange Uniswap. On that exchange, there is a lot of liquidity. So you have every time or at any time of the day, you can actually trade with the smart contract and have you have a counterparty for your trade. So you can swap tokens, you can swap currencies, essentially any asset that is in the form of a token on Ethereum. So these are all Ethereum ecosystem projects, but there are also other chains, which we will also see later. So we have exchanges, yeah, like the NASDAQ, just decentralized. Then we have Aave, which is a protocol that covers the loans and savings area. So you can borrow against collateral. For example, you put in Bitcoin and you borrow US dollars against it, or you lend idle assets and earn interest. So when you like put in your Bitcoin, you even earn interest on that Bitcoin because it is a fraction of that is lent out at any point in time. Then we have protocols like Barnbridge or also MPH, which are there for time deposits. So here you can earn fixed or variable interests depending on the protocol over a certain period of time. And they have different approaches to that. So, for example, Barnbridge structures bonds in a way that you have a senior tranche of a bond and a junior tranche of a bond. That means the interest rate of the senior bond usually is lower, but it is also safer. Yeah, so if interests on the market fluctuate, then first the interest on a junior bond fluctuates and then on the senior bond. So quite interesting for bond investors that just want to have a stable cash flow. Then with MPH, they have essentially they have a similar idea, but they solved it differently. So here, instead of having junior and senior bonds, you can you just get fixed interest rate, and then someone else can buy the debt that you create with your bond to go leverage on the yield curve. Yeah. So if the yield increases, then the person who bought the debt actually earns a lot more money than in any other circumstance because he needs less capital. It's kind of a way to speculate with leverage on the yield curve. So yeah, quite innovative. All of these things essentially exist in traditional finance, but they now also exist in decentralized finance. So it is a very fast evolving environment and also quite developed already. Then you have yield farming, which actually doesn't exist in traditional finance. Yield farming means you provide liquidity and earn auto-compounding protocol rewards. So for example, let's just say in Aave, just as an example, although it's not true, let's say you provide liquidity, you lend out your tokens, and Aave would give you the Aave token as a reward for that. Then you could just say, okay, I provide US dollars, for example. I get interest anyways for lending out my US dollars, but I also get this protocol incentive, this reward. And instead of me claiming that reward all the time and reinvesting it in US dollars, and then deploying that again in the Aave protocol to earn more interest, instead of doing this all myself, there is a structure of smart contracts that essentially do that automatically for you and auto compound your investments. So that's also quite interesting. Then what more do we have in DeFi? We have autonomous portfolio balancing with Balancer, for example. So as you know, when you build a portfolio, then usually you have a certain capital allocation to different assets. And now instead of, so in a traditional way, you have to rebalance your portfolio in a certain interval, like quarterly or annually or whatever, or even have it dependent on thresholds in terms of allocation thresholds. So if one asset deviates too much from the allocation that it should have, then it triggers the rebalancing. Now, this exact concept is used in Balancer, but with the combination of a decentralized exchange, so that actually traders are doing the rebalancing for you, and you earn trading fees by them doing so. So it completely flips the traditional model upside down, where you now actually earn money by getting your portfolio rebalanced. Quite interesting. Then options with hedges, pretty straightforward. You can buy or sell put and call options in a decentralized fashion. So that's really not so easy to construct, to be honest. Then synthetic asset trading. So you can essentially duplicate any asset that you have, either in the crypto space or in real life, like for example crude oil contracts, and you can put them as a synthetic asset on the exchange on the blockchain and trade it. And the interesting concept what they have is that you have zero slippage, so no matter what your trade size is, you will get exactly the price that you see, which is unlike normal markets. And they do that with a very elaborated collateralization mechanic, actually. So then you have UMA, which enables you to create derivatives on anything. Like, for example, so you can have that on any metric or event. So, for example, you could create a token that says Merkel wins the election in Germany this year, if she's even candidating, which she's not, but you could do that. And then depending on the outcome, there would be a payout. Yeah. But you can also do that for financial contracts and essentially any metric that you can come up with. And then you have also perpetual futures trading, which means you can speculate with up to 10x leverage in this case on financial assets, and they're constantly expanding as well. So there's a lot of things going on, and they can be used, of course, in the personal environment for personal finance, and they can also be used for corporations because the liquidity, in fact, is growing exponentially. So it becomes increasingly interesting also for companies. Just to give you a rough feeling for that. So yesterday, Coinbase, one of the world's most famous cryptocurrency exchanges, had an IPO, and the market capitalization now is around, give or take, $100 billion. That's how the market evaluates this company. But the volume that they do is actually more or less equal to what Uniswap is doing. So we already have a decentralized exchange that is doing that much volume, as much volume as a $100 billion market cap company. And if you now ask, okay, what's the market cap of Uniswap, then that's actually way lower, interestingly enough, even though everyone can trade it freely. It's around 17 billion. So that also shows some opportunities, obviously. All right, but let's take a step back and briefly talk about the evolution of DeFi. And I don't want to be too technical here and not going too deep, but just as a rough overview. So everything, of course, started with Bitcoin. Bitcoin as the first solution to transfer value and also to keep account of who owns what, and inside this closed system, and make it essentially bulletproof when it comes to any types of attacks, really. At this point, it has proven itself, obviously. That's why there's so much capital also flowing into it. Then the next generation of blockchains was Ethereum. There are also a couple other ones, but Ethereum really is like what Bitcoin is for store of value on the blockchain. Ethereum is essentially for decentralized code execution and the record of state. So while Bitcoin is just recording transactions and therefore knows, okay, which coin is where, Ethereum actually tracks computing steps of smart contracts, and therefore always knows if code was executed correctly. And therefore it is like bulletproof. If you don't construct a bug in your program, which of course is always possible, but let's say that is not the case, you have the ideal smart contract, then you always know exactly what the smart contract is doing, and there's no way that this could be manipulated or interrupted or anything like that. So that is pretty revolutionary. And Ethereum, so in 2017 we had this ICO boom. So that was kind of the first real application of Ethereum as a smart contract language, because a token, any token on the blockchain, is essentially just a smart contract. But this was the first application of smart contracts, and it was essentially only crowdfunding, and had made up a really bad reputation for crypto also going into 2018 and following. But as a matter of fact, quite a few of these funded projects have delivered valuable platforms, as I just showed you. Most of them had an ICO, not all of them though. And this is only possible because of the power of smart contracts and the underlying security of Ethereum. And what these smart contracts enable you to do is, because it is on the blockchain, it allows you for conditional exchange of value, of course, with a guaranteed settlement that is guaranteed by the code, and therefore there is no counterparty risk anymore. And this is a thing in finance, obviously. When you have high value transactions, you always have to check, okay, who's my opponent, yeah, with whom I'm trading with, and this is solved through clearinghouses, etc. So there is of course it works, yeah, we know that it works, but it is way less efficient than if you have full transparency. And this is what smart contracts actually enable, and a public ledger like a blockchain. And what this actually means, like how does that look like, I would like to show you with this link. Second. So this is the data about Hedgig, which is this option platform, DeFi project. And as you can see, you have, well, all relevant data points that you can dream of. And this is only, of course, what this website deemed interesting. But if you know what you're doing, if you're a programmer or have a team of programmers, then you can have any data about a project and analyze it, because it is on chain, and so anyone can look it up. This is essentially like you would get a not or an unconsolidated financial report of the company that you're investing in every single day. That is just revolutionary. Like, that doesn't exist in traditional finance. This level of transparency, and therefore you can also, you're less prone to invest in frauds or anything like that, because you can always know what is actually going on. It's pretty crazy. So that is like where we are now with the smart contracts and, well, visualization. But to really emphasize the difference here between decentralized finance and traditional finance, just to touch on that briefly, is these pictures. So let's start on the left side here with the traditional financial system, where there's you, and if you want to make a transaction, you go to your bank or online, of course, and say, okay, I want to transfer that to someone else. And what happens then is your bank, depending on which payment method you use, if you use PayPal, then it even goes through a couple more intermediaries. But essentially, it's always that there are multiple mans in the middle, and all of them, of course, delay the process. All of them do their security checks, and we're now not talking so much about you sending $5 to your friend, but we're talking about high value transactions. When businesses have deals or have any type of big financial transaction, and this is really important, that when you can slow down that process, speed up that process, because you take out the mans in the middle, and also make it cheaper, because you have the settlement on the blockchain with finality within minutes all around the globe. Then this is essentially what is down there. There's just you, the protocol, and the receiver. So all of that old structure that is cost efficient and adds friction to the process is removed. And this principle is also carried forward towards the infrastructure as well. So the IT infrastructure itself. So when you think about the internet is kind of both decentralized and also centralized, because of course anyone could launch a server. So in that sense, it is kind of decentralized, but at the same time, when you look at the user experience, it is still, there are many users connecting to one central server. And depending on how important that server is, this is like a weak point, an area of attack also. Let's just say you're a government and you have your central server with all your, or an intelligence agency, then obviously your central server is like the prime target of every hacker in the world. Yeah. Now, opposed to that, you have again this ecosystem of cryptographically secured blockchains, and this makes it decentralized so that there is just no single point which you can attack. You have to attack the whole network, and this is what makes it way more robust, even anti-fragile, and yeah, and just also, as a matter of fact, depending on what it is, it can also make it even more efficient. Although decentralized networks in general, we have to admit that they are usually slower. That's definitely true. But it really depends on how you deploy the technology. But long story short, the decentralization has, of course, this huge benefit of not being attackable in the traditional sense. And this is also quite interesting for projects that, well, or not projects, but in any case, applications that may not be considered friendly for one government or the other. And we all know that there are not only nice governments in the world. So also these kind of services cannot be interrupted anymore if they're on a decentralized network. So, heartbreak. Let's get back from the big like philosophical view back to ourselves. What is the use for us personally? And this is also where I started, kind of. And I just want to show you something so that you actually see it in real life. What I will do now is a few transactions on the Binance Smart Chain, which is like Ethereum, just different in the sense that it is faster, it is cheaper, and it is also more centralized. That's why I would never actually recommend it, but it is just better for the purpose of this presentation, to show you things. So let me actually switch over. All right, so what I do is I will now use my decentralized account. Yeah, I don't have account with a bank here. I just have this 0.1 BNB, and I will switch that into US dollars. And then I essentially confirm the transaction. Wait a second until it is mined. And then I will hop over to this protocol, which is called Venus, to deposit that US dollar and earn interest. So let's see how that goes. Okay, that's interesting. Did that not get through? Yep, that transaction did fail for whatever reason. Let's try it again. It's just a page. You know that effect always happens when you want to show something. All right. Yeah, now it worked. As you can see, now I have here the balance. So I switch over to this protocol, and I have to reload this again, as it seems. Okay. As you see, I'm not so familiar with Binance Smart Chain because I never use it. So now I deposit my US dollar, tokenized US dollar. And what you see here is that, okay, I will get this amount of yield, just interest rate, essentially. Then I will also get rewarded from that platform. Yeah. So this is the additional tokens that I get. I will just put that in here now. So what I also do in the meantime is switching some more over to the token of this decentralized exchange here, because I want to show you yield farming in the traditional sense as well. So let's do that transaction. Did this go through? Yeah, okay. Now I have this $50 here, earning 8% or 8.5% interest. Now I want to see if I can put this into farm, which is essentially like Yearn like Yearn is on Ethereum. This is a yield farming protocol, so that it auto compounds your rewards and gains. I got the wrong contract here, but doesn't really matter because what I can do is show you the other ones. So what I do now on that exchange, so I changed Binance Coin into MDX Coin as well. And what I want to do now is provide liquidity. So I give liquidity to the exchange. That means I earn trading fees, and essentially I help that there's always the other position for someone who wants to trade. Obviously you get rewarded for that. So then let's check index. So I want to go the BNB index liquidity pool to earn 3,000% per year. Obviously, this is not really sustainable, but well, for now it is what it is. So these are kind of, the funny things that you can do in crypto. So let's actually go create LP. Oh, that's very convenient. I can just put in max here, approve that. So I allow the smart contract to spend my cryptocurrency of that sort, and the transaction went through. And now, okay, that was always, I don't know why these websites don't do a proper update then, but okay, here we go. So now I supply both currencies, BNB and MDX, and in return, I get a liquidity token, because the protocol needs to know that I have provided liquidity, right? And it also needs to have a certain way to track my share of the liquidity that is in there, and accordingly allocate trading fees that I can collect. So here you now see that my pool share is a very, very small percentage amount, and also how much MDX and BNB that actually is. So now I take this token over here, and this should be the right token. Let's hope it is. This one, right? Okay, this is very strange. Did I not connect my... I didn't connect my wallet, that's why. Okay. That's why. Here we go. Now I can deposit that. And as you can see, it's not difficult at all. It costs a few cents per transaction in this case. Now also the USDC vault should work. Okay. That was the approval and then the spending actually. Yeah, okay, and now, so still that was the wrong vault for whatever reason. Let's go back to MDX. Yep. Okay, so here you see I have 1.14 liquidity pool tokens in there. I can also harvest and withdraw them anytime. And yeah, here now it tells me my statistics that I have an average APY, like annual percentage return, of 3,000%, which is a daily almost 1% compounded. Yeah. And in this case here, I like it because they have the statistics really well laid out. So here essentially you have 0.97% daily, which means when you don't compound that, it is 351% a year. Then they calculate the optimum. Hello, anyone hear me?
Yes.
Okay, so good. Well, essentially, I was talking about how these numbers come to existence. Yeah, because this is not compounded return. It's a daily thing, and then you have the compounded return. If you compound it 14,000 times per year, and this is what this protocol is actually doing, like this platform. So this is kind of the value that it provides as well. Good. All right. So on the personal side, I think there are many opportunities depending on what you want to do. Do you want to have only like US dollars depositing? Then you don't have the price risk. Then you can do yield farming, just like I showed. Or do you want to have some price risk as well? Then you can obviously speculate on these projects after you did research. So these things are opportunities for personal finance. But since for most here, I think the job side is even more interesting. I want to talk briefly about the business and career opportunities, and then we can definitely also discuss about these things. And I'm looking forward to questions and comments. So there is a lot. Like, this industry is still in the infancy, although it's heating up tremendously. But what I personally see after being involved in researching this space for the last 5 years, that the connecting part from traditional finance and DeFi is still lacking. Like, there are so many opportunities, especially I would say for existing players like banks, because if you create a front end for users where they can just give you the money, and you actually in the back end as a bank do these things with a proper due diligence and also insurance, and therefore can offer nice returns on savings accounts, these things, that's actually a big market. And this is definitely an opportunity, either, as I said, as an existing company. So when you enter these companies that want to build up these bridges, then there is demand, definitely. But also for startups, obviously. Then there's this other area that is the tokenization of real assets. Again, anything that you have on the blockchain in a digital form can be used in smart contracts, can be used in all of these protocols, can be lent out, can be leveraged on, can be built on as well. So something like real estate, for example, is a prime example of what you could bring on the blockchain, which would have real value also. Because then suddenly you could use it, for example, in one of these lending protocols and actually get a loan on your house, for example, without needing to ask a bank for permission, without getting a better or worse interest rate because of your salary, or because of the country that you're living in, or whatever else criteria there may be. But instead, you can tap into a global borderless market and therefore get obviously better returns on average, and you have full flexibility. So these combinations of these building blocks, this is what makes DeFi really interesting, and in my opinion, definitely the future of finance in general. Then another big topic is legal contracts on the blockchain. I mean, I'm more the finance guy, not so much the legal guy, but this is definitely an interesting topic because these contracts can be enforced as long as it is, digital, and they are also preserved. Like there is no tampering afterwards, etc. So definitely interesting area. Then education, coaching, and consulting. That's a very obvious area. I mean, all of these consulting companies are building up their consulting teams in the blockchain space. Yeah, education and coaching is obviously also needed depending on which sector you are. Then edutainment, if you make a YouTube channel, that is definitely a good time to do so if you're into that. I mean, I know these YouTubers, I know these influencers, and they're all blowing up currently in terms of subscriber numbers. Essentially, they quadrupled their subscriber numbers in the last 3 months. So this is a good time to do something like that. Then venture capital, yes, there is a lot of venture capital opportunities there, and venture capital firms need researchers, so there's a lot to do. Also because venture capital is often involved in the governance process of these protocols. So you have quite a bit of involvement, and therefore also need manpower to do that, to come up with good strategies, etc. Then you could be a digital innovator yourself. I mean, there's so many building blocks that you can use, and because you can program on the blockchain, you can literally program anything that you can come up with. So Ethereum has a Turing complete virtual machine. That means you can program anything that you can usually program with languages like, for example, Python. It's a different language, but you can program the same things. So you can be really innovative here. And then DAO participation, as I just mentioned with venture capital. So DAO stands for Decentralized Autonomous Organization. And this is the form that most projects are organized or aspire to be in the future. So that means that there is usually a token associated with the project, and anyone who has a token also can vote on decisions about the further development of the protocol. And so this is called a DAO. They usually also have money to manage, so and to allocate for example, developers, buying developers or doing marketing campaigns whatsoever. And a DAO participation is a really interesting topic. That's actually also what I'm doing already, and I can only encourage. If you're interested in the space, go into these governance forums and talk to people, read what the discussions are about different issues that different protocols have. And there's a lot to learn from these discussions, definitely. In that sense, when it comes to the technological level of blockchain, I can definitely recommend the Ivan on Tech Academy. That's why I have the logo here, and Ivan should let me participate in the sales now. I'm a member of that academy, and I think the courses are really nice. They help a lot, and the good thing here is it's not just knowledge, but it is also they also have a forum where you can exchange your thoughts with other developers and also other people who are learning, but they also have a network of companies and they kind of help you to find a job in the space, which is quite valuable as well. So there's a lot of opportunity, and I would like this part. I would like to end this part of the presentation with the quote from Michael Dell. It's through curiosity and looking at opportunities in new ways that we've always mapped our path. And I think companies, financial companies especially, who keep that in mind will do well, while others will probably not do so well. All right, thank you very much for your attention. We can stop the recording now and go into Q&A.